guala, yeah, and you are not badass beat. Keep on going till you hit the spot. Whoa, I'm a big bag hunter with the bow. She got a big bed number.
Bursa Malaysia Derivatives Berhad is a wholly owned subsidiary of Bursa Malaysia Berhad. At Bursa Malaysia Derivatives, we provide a wide range of derivatives products tradable globally via the CME Globex trading platform. Among our equity and financial derivatives, we offer the FKLI, which enables traders to gain leveraged exposure to the local equity market. Of all our products, we are best known globally for our crude palm oil futures. Our FCPO has maintained its position as the global price benchmark and reference point for the international oil and fats industry for over 40 years. As pioneers of palm oil futures and options in Malaysia's earliest commodities exchange platforms, we have for decades developed an in-depth understanding of the value of our palm complex offerings in every respect. Every detail along the supply chain, from cultivation to trading to hedging, no one knows the palm complex like we do. This is where Bursa Malaysia Derivatives offers unparalleled expertise. Our comprehensive array of products, partnerships and platforms connect Bursa Malaysia Derivatives to traders and investors all over the world. Find out more by contacting one of our licensed futures brokers or visit www.bursamalaysia.com.
Hi, Assalamualaikum warahmatullahi wabarakatuh. Good evening, ladies and gentlemen. Welcome to the evening forum for today. First of all, I would like to thank all of the audience in front of me and thank you very much for attending the forum for today. Our issue tonight is derivative in Malaysia. First of all, let me introduce to all of you about our panels for tonight because most of them have a lot of knowledge and also experience about this topic that we will discuss. First of all, special invited CEO of Bank Islam Malaysia Berhad, Mr. Aslam Askadov. Next, Ms. Novarik Diana, Financial Manager of Mega Holding. And panel number 3, Mr. Amir, Consultant Finance at Minister of Finance. And the last panel is the very experienced lecturer at University of Auckland, Professor Said Hafizuddin. Welcome to our forum for today. I hope all of you are in the pink of health. So, as we know, derivatives are a financial product and derivatives are listed under Bursa Malaysia Derivatives Berhad in a Malaysia stock exchange. In Malaysia, there are only 3 types of derivative available through Bursa Malaysia Derivative, which is commodity derivative, equity derivative, and financial derivative. Since we have watched the video early, so let's start the discussion. If you have any question about derivative, their application or the regulatory framework in Malaysia, feel free to ask. And if you have any personal experience or insight to share, we would love to hear them. Okay, for further detail about this topic, I would like to seek an information from the first panel next to me, Mr. Aslan. So without wasting our time, my first question to our first panel, Mr. Aslan, can you tell us and explain in detail about the overview of derivative in Malaysia?
Okay, thank you, moderator. First, derivative are financial products that help investors to hedge their bets against the uncertainty of today's market. The worth of a derivative is based on some underlying instrument like a commodity, interest rate, index, or stock. These assets are typically traded on exchanges or over the counter and are purchased through brokerage. In other words, derivative is a financial contract whose value is tied to the anticipated future price movement of an underlying asset and is a device for risk management, speculation and arbitrage. For example, is futures. Futures is a derivative product that are considered to be quite simple. A future contract is an agreement between two parties to purchase and deliver an item at an agreed upon price at a future date. So futures are standardized contract that are traded on a market and is used by traders to hedge their risks or speculate on the price of an underlying asset. The parties involved are required to follow through on a commitment to buy or sell the underlying asset. That's all my explanation for the derivative.
So thank you to the Mr. Aslan. From what of Mr. Aslan have said, now we know the derivative in Malaysia. My next question is Miss Diana. What should we know about the financial derivative and what the type of financial derivative? Can you explain it?
So, for the definitions of financial derivatives can be defined as the financial instruments that are linked to a specific financial instruments or indicator or commodity and through which specific financial risks can be traded in financial markets in their own right. In addition, financial derivatives enable parties to trade specific financial risks such as interest rate risk, currency, equity, and commodity price risk and credit risk, etc., to other entities who are more willing or better suited to take or manage these risks, typically, but not always, without trading in a primary asset or commodity. Moreover, financial derivatives contracts are usually settled by net payment of cash. So, for the types of financial derivative, there are four types of it. The first one is the futures. The second one is the and options. The third one is the forwards, and the last one is the swaps. That's all from me.
Okay, thank you to the Miss Diana. Okay, my next question to Mr. Amir. Can you explain about the commodity derivative and give one example product in commodity derivative?
Okay, thank you, Mr. Moderator. Next, I will present about commodity derivative. Commodity derivative is a financial instrument, the value of which depend on a commodity such as grains, energy, or metals. The first product of commodity derivative is FCPO, crude palm oil futures. FCPO is a ringgit Malaysia dominate crude palm oil futures contract trade on Bursa Malaysia derivative, providing market participant a global price benchmark for the crude palm oil market since October 1918. For over 40 years, FCPO is actively used by edible oils and fats industry players as a risk management solution, as well as by funds managers and financial institutions for managing price fluctuations in the markets. Okay, for the FCPO, the contract size is 25 metric tons, and the contract month, spot months, and the next 11 succeed method, and thereafter alternate months up to 36 months ahead. For the price limits, with the exception of trades in the currently deliver months, trades for future delivery of crude palm oil in any months must not be during any one business day at a price varying more than 10% above or below the settlement price of the preceding business day, except as below. First is when the 10% limit is triggered, the exchange will announce a 10-minute cooling off period.
Okay, thank you, Mr. Amir, for the explanation. Now, my question for Professor Said. What about the equity derivative? And can you give explanation the characteristic and the product, the example of product from equity derivative?
So, the Malaysian derivatives market for equity derivative refers to the financial market in Malaysia where derivative instruments are traded based on equity of stocks. Equity derivatives are financial contracts whose value is derived from an underlying stock or equity index. So, in Malaysia, the main platform for trading equity derivative is Bursa Malaysia Derivatives Berhad. We call it BMD. So BMD operates as a subsidiary of Bursa Malaysia, which is the country's stock exchange. BMD offers a range of equity derivative products for investors and traders to participate in the Malaysian equity market. Okay, we go to the Malaysian derivative market for equity derivative has the following silence characteristic and products. So the first one you must know is single stock features. We call it SSF. Single stock features are contracts that allow investors to buy or sell a specific numbers of shares of a single company at a predetermined price and future dates. BND offer SSF contract on various Malaysian list companies. So we go to the second point, which is index futures. BND provides index futures contract based on the FTSE Bursa Malaysia KLCI, which is Kuala Lumpur Composite Index, which represented the performance of Malaysian stock market. Investors can use index futures to speculate on the overall market movement or hedge their portfolio risks. The third one is options. BMD also offers equity option on individual stock. Option provided the right but not the obligation to buy or sell specific quantity of shares at a predetermined price within a specific period. Equity options in Malaysia are European style options, while it can be exercised only at an expiration. Okay, so we go to the next point, which is trading mechanism. The trading of equity derivative on BMND follows an electronic trading platform known as Bursa Trade Securities, which is BTS. Market participants can place their orders to listed brokerage firms that are members of Bursa Malaysia. So the last point, which is risk management. BMD has implemented a risk management measure to ensure the stability and safety of the market. This includes margin requirement, position limits, and daily price limit to manage potential risks associated with equity derivative trading. So, in the conclusion here, the Malaysian derivative market for equity derivative offers a diverse range of products that cater to various investor objectives. While it presents opportunity for portfolio diversification, risk management, and speculative trading, investors should exercise caution and seek professional advice to make informed decisions and effectively manage the risks associated with trading equity derivatives. However, investors and traders can participate in the Malaysian derivative market for equity derivatives to gain exposure to Malaysian stocks, hedge their portfolio risks, or engage in speculative trading strategies. It is important to understand the risks involved and have a good understanding of the derivative product before engaging in trading activities. Seeking advice for qualified professional or brokers is recommended to make informed investment decisions. Okay, that's all from me. Thank you.
So thank you, Mr. Said. Now we back to our first panel, Mr. Aslan. Anything you want to add about the derivative discussion? Is good or bad?
Thank you again, moderator. So, derivative is both good and bad. And for me, derivative have its own advantages and disadvantages. And it depends on how the person use derivative to their advantage. So, business and investor alike can benefit a lot from using derivative. They allow us to do many things such as lock in price, protection from adverse rate changes, and then by using a hedge and for trader to mitigate the risk. Derivatives are frequently purchased on margin, which means that trader utilize borrowed cash to do so, and this can also reduce the price even further. But derivative also have disadvantage where valuing a derivative can be really challenging because it is tied to the value of another asset. Most derivatives are also vulnerable to change in the amount of time to expiration, the cost of holding the underlying asset and interest rate. Because of all these factors, it is not always easy to determine how closely the value of a derivative corresponds to that of the underlying asset. Last but not least, derivatives are commonly leveraged instruments and can be extremely convenient technique to attain financial objectives. For example, a corporation can hedge its commodity exposure by purchasing or selling energy derivatives, such as crude oil futures. And a corporation can also hedge its currency risk by obtaining currency forward contract. So derivative can assist investors in leveraging their position, such as when purchasing equities using stock option rather than share. So there are many advantages and both pros and cons in utilizing leverage. And just like I mentioned before, it depends to how a person use the derivative to understand if it's a good or a bad option for them. While derivative does exchange the rate of return, it will also increase the rate at which losses accumulate. And that's all from me. Thank you very much.
Okay, thank you, Mr. Aslan, for the explanation. And next question to Miss Diana. Can you explain in more detail about the product that is available in Bursa Malaysia derivative and what are the benefits of financial derivative?
So, about the financial derivatives product that available on the Bursa Malaysia derivative, there are three products, which is the first one is 3 months Kuala Lumpur Interbank Offered Rate Futures. The second one is 3-year Malaysian Government Security Futures. And the last one is 5-year Malaysian Government Securities Futures. That's for the product. So, there are three benefits of financial derivative that I want to highlight. The first one is hedge risk. Derivatives help investors in manage their risk levels by allowing them to hedge against potential losses. By using derivatives, investors can reduce their exposure to certain risks, such as currency or interest rate fluctuations. The second benefit is low expenses. Since derivative trading is primarily done to reduce risk, the charges are lower compared to shares or debentures. The last one is transfer risk. Unlike stock trading, derivative trading allows you to transfer the risk to all stakeholders involved in the process. Hence, your risk reduced considerably. So that's all for the benefits. Thank you.
Thanks to Miss Diana for the explanation. We have listened about the product and benefit of a financial derivative. Now, I would like to ask next question to Mr. Amir. Before this, you give one example of the product commodity derivative, which is crude palm oil futures. And can you give another one example product of commodity derivative?
Okay, for the second product of commodity derivative is gold futures, FGLD. For the underlying instrument, gold assay to a minimum of 995 fitness or such other technical specification of gold underlying LBMA gold price AM. Okay, for the contract multiplier is 14 per contract unit, and the contract size is one contract equal the reference price per troy ounce multiplied by the contract multiplier. Okay, for the minimum price fluctuation is 1 cent USD per contract unit. The value per tick is equivalent to 4 ringgit Malaysian. For the contract months, spot months and next 3 calendar months and any February, April, June, August, October and December falling within a 12 months period beginning with the spot months. For the price limits, there must be no trading at a price more than 10% above or below the latest daily settlement price, except as provide below. The first one is if spot month contract trades at the 10% limit, the exchange will announce a 10-minute cooling off period for contract of all contract months, during which trading may only take place within the 10% limit for contract of all contract months.
Okay, thank you to Mr. Omer for the detailed explanation. Now, my last question to Professor Said and for the forum. What about the product of equity derivative, and what the opportunities, also the benefit equity derivative to investor?
Okay, hi, I'm back. So I have an extra point for my part, which is the Malaysian derivative market. For equity derivative present various opportunities and benefit for investors. So portfolio diversification, equity derivative enable investors to diversify their portfolios by gaining exposure to multiple stock or the overall market index. This diversification can help manage risk and enhance potential returns. So the second point is risk management. Investors can use equity derivative for risk management purpose, including hedging against adverse price movement in individual stocks or the overall market. Hedging strategies can help protect portfolio during volatile market conditions. For the next point is speculation and trading. Traders can engage in speculative activities by taking advantage of price movement in specific stock of the market index. The leverage offered by derivative allows investors to control larger positions with a smaller capital outlay. So the next is efficient price discovery. The derivative market enhanced price discovery as traders and investors provided liquidity, so resulting in efficient and transparent pricing for underlying the asset. Okay, in here I have two more points, which is electronic trading platform. The electronic trading platform Bursa Traders Security with BTS provided a seamless and accessibility way to market participants to trade equity derivatives, fostering liquidity and market efficiency. So the last one is regulatory oversight and investor protection. The Securities Commission Malaysia ensure that the derivatives market operates, which is a robust regulatory framework, providing investor protection and maintaining market integrity. Thank you.
Okay, thank you, Professor Said. Now we know that about the detailed types and the product and also the benefit of derivative. Finally, we have come to the end of our forum for tonight, where we have shared a lot of knowledge which we don't even know before. For the last word from me, I would like to thank again to all ladies and gentlemen for tonight, and also to our panels. A billion thanks I dedicate to everyone for cheering up this forum tonight. Thank you all for an engaging discussion on derivative in Malaysia. It's incredible to see our forum community coming together to learn and share knowledge. Remember, the world of finance is vast and ever evolving, so continuous learning is key. If you have more questions or want to explore other financial topics, don't hesitate to create a new threads, and let's keep the conversation going and support each other's financial journeys. So thank you for your attention. That's all. Assalamualaikum warahmatullahi wabarakatuh.